Hello, everybody, and welcome to this week's podcast for Thursday, January 22nd. Hope everyone is doing well. We were talking at lunch. It's actually been a while since either you or I sat down at this table and jumped on a podcast, huh?
Yeah, we've had a couple guest shows that Ian ran, and then we had the weight of the evidence quarterly report webinar up there for one of the podcasts as well. So it's nice to get back to normal, I guess.
Yeah, well, for those of you listening, hope everyone is having a wonderful start to the year. We're saying at the end of January, so happy New Year. But point being, we're having a pretty good start to the year. And then recently this week, they kind of a chink in the armor, if you will, with some Greenland and tariff implementation or possible implementation. So markets have backed off a little bit this week. But all in all, a lot of the names we typically look at still having a somewhat constructive open of the year. You've got the performance table in front of you, I think, right?
Yeah. So we had been talking about like, momentum's had a really strong start to the year,
Yeah.
relative to the S&P. And part of that's, the mega caps haven't done as well. We'll get into that a little bit later. But generally speaking, the trends that we saw in the kind of second half of last year have persisted through January so far. And it's a really short time period to look at, but we looked at like the first 2 weeks or the first half of January, excuse me, and how the S&P did versus the MTUM ETF.
Right. A momentum proxy.
Yeah, or just a momentum proxy. And historically speaking, whichever one beats the other during the first 2 weeks of the year ends up outperforming for the entire calendar year.
Right.
That's about 75% of the time. Then if you look at the last decade, the winner in the first 2 weeks has gone on to win the year 80% of the time.
Hmm.
So it's not like something where I'm like,
Bet the house on it,
I'm not going to
right?
bet the house on it, but it's just
Yeah.
like
Yeah.
just an interesting data point.
It's interesting how some of that seasonality stuff comes into play. We can talk about the January barometer, which we throw in the report from time to time. We won't get into it today, but it's the kind of this idea that a positive January precedes a positive year, a negative January, a negative year. So there's a lot of kind of fun, interesting seasonality stuff that comes around. And of course, we like to talk about it when it's on the right side for us, when markets are up or momentum's doing well. Maybe we won't talk about it when momentum isn't doing as well. Maybe next January or the next one after that. But point being, good start opening to the year for momentum. Coming at different hands, though, than what we saw in 2024, 2023, and 2025. You know, some of your larger tech-focused areas have struggled a little bit, right? The Magnificent Seven um, struggling a little bit to open up the year. But some of that other relative strength has been picked up by more industrial names, which we'll get into a little bit later. We've seen a handful of relative strength changes worth watching. We can look at value versus growth to, kind of pin one up against the other in an arm wrestling contest, right? So we can take representative VUG, so Vanguard growth versus VTV, Vanguard value. And then essentially, again, just compare them one against the other in a relative strength comparison. We'll throw the chart up on the screen now, but what we saw over the last week was a reversal back down favoring value in the near term, right? So in the long term, growth is still favored. I think we have been since 2023, mid 2023. But again, kind of speaks to what has emerged in 2025 was just some leadership, near-term leadership from value-focused areas.
Yeah. And you could say it's also not just value either. I mean, there have been some growth areas that are still doing well. It's just the cap weighted stuff hasn't done as well.
Right.
Like the S&P is slightly negative on the year, but the S&P equal weight is up over 4% this year.
Right.
So like the average stock is doing really well. And some of that does come from like the value areas, like you mentioned, more like the industrials, materials has had a pretty good start, I think.
Right.
Energy's done really well. XLE's up over 6% this year so far. Now, not a lot of energy stuff and momentum strategies just yet,
Right.
but just like more evidence that we're kind of seeing the value camp do pretty well to start this year. But like you mentioned, I mean, we're still in a buy signal, and that's been the case um, since mid 2023 in favor of growth.
Yeah.
So the long term is still growth oriented, but it is nice that we have a bit more of a diverse universe to choose from now.
Yeah, when you don't have to just rely on five names.
Yeah.
I'll be personally very interested whether you're following the reversals on this specific chart or whichever one is in control via signal. Following a strategy that owns either asset is productive versus just a buy and hold strategy of either. But I want to mention, I think it's very interesting. We saw a couple of other instances since that 2023 buy signal where we saw reversals back down into O's. Growth swiftly took over from there, right? I think
Yeah.
we just had a three-box reversal, and then that was essentially it in the other two instances besides this one, if I'm remembering the chart correctly. But point is what what is going to come down the pipeline in 2026? Will it just be growth establishing leadership immediately again, or are we in kind of the midst of a more serious transition towards other names rather than just four or five that are leading the way?
I think it's too early to tell
Yeah,
right now. I mean, for me, I would still be on the growth mega cap trend for now.
yeah,
I do think there's some more interesting opportunities out there nowadays where you can kind of get away from that and still do pretty well.
yeah,
I mean, even international's done really well to start this year,
right.
and precious metals as well have also had a really strong start to the year, like they did um, last year. So I think it's nice that there's a bit more opportunities out there. I think you put something in the report about the core percentile rank is kind of backed off a bit. It was like above 95%,
Above 99%, pretty well.
it was,
Yeah,
and now it's like closer to around 90%
yeah.
or so. So not like a crazy amount of things to own that are better than the core market right now, but there's quite a bit more than there was.
Yeah, and just for reference, the core percentile rank that we just referenced measures on the asset class group scores page where the S&P 500 groups ranks. So if it's strong or a high core percentile rank, that means it's a strong core. And we've been in a very strong core market for the better part of the last, decade or so, sans a few hiccups here or there. But point being, we're seeing a slight back off from that core group. And just like Joseph, you just mentioned, all that means is that there's a handful of other areas doing better than the S&P 500 from a kind of longer term ranking perspective, which is a good thing if you're trying to go out there and actually tactically beat the core, right? Not
Yeah.
just own the core. But one of those areas, as we move on to the next area, is industrials, right? We've seen with the start of 2026 come underway, industrials have moved higher, especially with global unrest, right? There's been a lot of headlines and news following most recently Greenland, obviously Venezuela as well, down in South America. Point is that there's been a handful of unrest that is, of course, going to lend itself to a more productive environment for the likes of aerospace and defense names, which have done quite well. We can throw up the chart for PPA. I think it's still very strong. I don't know the fund score off the top of my head, but it probably is a bit extended around current levels. But point being is that it's been a relative leader, leading industrials to close in terms of our overall rankings on the likes of technology and comm services.
Yeah, PPA, the Invesco Aerospace and Defense ETF that you talked about. I mean, it's near perfect fund score, 5.84. It's up about 14% this year, but it is 135% overbought. So a bit extended, not much support nearby. If you own it, you feel pretty good about it.
Right.
But I don't know if it's something I'd be buying today.
Yeah, is support, where is support? I haven't looked at that chart. Is it
Looking
a
at 146, it's trading at 180.
gotcha? Okay. Yeah. So we're a ways away. But it goes to show you, and we can look at a couple other examples of this. A lot of the international equities are still quite extended. Talk about extended, you look at precious metals, right? But point being is that leadership or emerging leadership from the likes of aerospace and defense names is again leading to some near changes on like the Dolly sector rankings, for instance, where industrials is now just like 5 to 10 signals behind the likes of technology and comm services. So, you're seeing some strength emerge from that group for sure.
Definitely. Definitely.
What else? I mean, obviously, oh yeah, speaking of, unrest in Venezuela, right? We have seen a resurgence in, or not a resurgence, but a pickup in some near-term volatility around the energy space, right? And you put a piece together about that in the report.
Yeah, it was just like the energy equities were starting to turn around. I mean, it seems like crude oil, the low is in the mid 50s. There's like a pretty good floor
Right,
there, right? Which I think gives an opportunity for any shocks to the system to kind of send prices higher, but there's also not much to send prices a ton lower.
right,
I do know like the Venezuela oil, like they're seizing the oil, and potentially using some of it to refill the strategic reserves, but
right,
also just gonna sell it at market price. But I'm not sure how much that pushes prices down further than like the mid 50s.
right,
I mean, once you start to get to like to the low 50s or upper 40s on crude, producers are having a tough time.
right.
They're not really incentivized to pump
Actually
out
got
more
there. Yeah, pump.
oil
Yeah,
at that point. So, but with that said, XLE looks like it's going to try to make a new all-time high. The kind of Spider Energy Fund and oil services has really been like the really strong area. Exploration not so much, but oil services has done actually pretty well to start this year, and actually did really well at the end of last year too.
hmm.
So if we start to see it move up more up the rankings, I mean, energy's moved up kind of from the bottom of our sector rankings up to on the cusp of equal weight
Yeah.
rankings.
What's
But
XLE's fund score now?
XLEs is just above 3.
Just above 3. So technically actionable. Obviously, there's probably areas, some broad sector representation that's above 4, above 5. We would prefer to see that, but you look at an emerging group that has previously been a point of relative weakness, is now starting to show some signs of life. I think that's at least compelling for, kind of satellite positions. Maybe,
Yeah, I mean,
maybe, I don't know.
it's not gonna outcompete the likes of industrials right
Yeah,
now
yeah, yeah,
or tech or comm services. If you wanted to take some small positions in energy, like traditional energy, I think um, there's some good opportunities out there if you really wanted to do that. That's something that I'm gonna have overweight in a portfolio though.
right.
I think it's acceptable to own some now where before it wasn't.
Right. And remember, even when you are doing that, focus on whether you're in a strong sector or a weak sector. Focus on those high attribute, high conviction names using the technical attribute and fund scoring system that we've got on the platform, right? Stocks ranging from 0 to 5. Energy might be just on the cusp of acceptable. But when you're looking for that energy exposure, or you're looking for the healthcare exposure, or you're looking for the utility, whatever it may be, right? You can find those high conviction names within the sector to fill out that opportunity within your portfolio. While your competitors can't, right? They don't have your kind of high conviction, high RS names. Just based purely on that technical attribute score. So remember to utilize that. It's on the platform for each and every stock and fund.
Yeah.
What else? So, obviously, oh yeah, I sent you a mystery chart and I told them, I said, don't look at this until I mention it. Take a look at it. We'll throw up on the screen. It's a little, it's a little out there. You might be able to get it, knowing you. What do you think? You know what part of the platform it is.
Yeah, so we never bought or sold for something. It's like pretty much the highest it's been since 2020. So I'm gonna guess silver.
It is. It's for yeah. It's for SLV, but it's a still representative. But point being, what I wanted to do with this was talk about how you or how both of us would read a scenario where something is strong. You could do this for PPA as well, right? Going back to it. Something is strong, but it's historically overbought, but it was also overbought last year. And it was, you know what I mean? So how do you, if you had advice for those listening, how do you kind of approach those types of scenarios where you just kind of watch something run? Is it too late to jump in? Not necessarily to silver, but heavily overbought names. How do you kind of approach that?
Yeah, I mean, it's gotten overbought before. I mean, it got close to 160% overbought back in September, October timeframe. Now it got all the way back down like 15% overbought. So near the middle of the trading band.
Right.
Um, what I usually would say in this situation is you're going to get a better opportunity.
Yeah.
Even if the price is roughly where it's at right now. Um, if you just kind of let it normalize either by pulling back or just kind of staying where it is now
Right.
for a while, you just kind of reduce the risk of having it really move against you right as you enter the position, which
Yeah.
is like, then you'll panic, and sell it like right when
Right.
it's
There's a
not
lot of emotions
right
there.
where the
Yeah.
good
Yeah.
opportunity is.
Yeah.
So yeah, I would just hold off. I mean, I'd rather miss a move than like have FOMO and not put myself in a good position.
Yeah. No, it's super easy. I'm sure a lot of your clients, some of you gold bugs, silver bugs out there, of course, you were buying, you've been buying it forever. So now you're happy to see something pay off. But point being, you can watch these, well, we'll call them a tail event, essentially happen right in front of your face. And that is, if you're not already in them, can be some of the scariest moments because there's a lot of FOMO, there's headlines. It's all about remaining emotionless, utilizing the chart to find relative support levels, knowing when pullbacks are just pullbacks and not something more. And so again, just keep that in mind. Assets can always get more overbought. We're seeing that a lot within the precious metal spaces right now. Just remember to, continue to keep your eye on the chart and utilize the technicals to figure out when things are strong or weakening, I guess we'll say.
Mhm.
Any other thoughts? We didn't get to earnings or anything like that. That's getting going. Netflix was the big one on last or this Tuesday. They struggled. They're back down to a two attribute stock for the first time in quite a while. I don't know if I haven't watched Stranger Things. So maybe that's the reason they missed. They didn't miss, but there was some margin compression and things like that. Um, but yeah.
I mean, that seems to be the story, not with just like the entertainment stuff, but I mean, bank earnings, they weren't bad, but they weren't great
Yeah.
either.
And
So
reactions to those earnings were mostly negative, right?
like negative day of
Yeah.
and a little bit after, but it's not like they've fallen apart or
Right.
anything.
Yeah.
I mean,
Yeah.
still the really strong ones. Like you look at like JP Morgan looks much more actionable. There's a lot of support where it's at right now. It's not overbought. Um, Goldman Sachs still looks really good.
Stacks.
Yeah, Goldman Sachs still looks really strong. You didn't even pull back. I don't even know if that's a good entry point in that chart right now where it's at. But JP Morgan could be a name to look at. After I mean, I wouldn't even say the earnings were like bad. They just like weren't exceptional.
Yeah. And it actually brings up a very good point. We reference all of the time playing the piano with both hands, right? Having the fundamentals and the technicals. When there is a poor reaction, regardless of if a company beats or misses or whatever it is, when there is a poor reaction in a high RS name, a lot of the times we'll actually go and say, as long as the fundamentals weren't a complete disaster, is the technicals still look good, right? We can actually use that kind of fundamental um, decline as a kind of justification or utilize the technicals to help, move into positions of strength that might have fallen slightly on their earnings. So again, keep in mind earnings are a kind of peek behind the curtain. There's chances for price reactions, and you can kind of take advantage of those when you're looking at pullbacks on charts.
Yeah, and JP Morgan, I think like it's a 5 for 5 still.
Yeah.
It's got multiple levels of support nearby now.
Yeah.
So I think like if you were looking for an entry point into what was a really strong stock and has been for a while, I mean you're getting a pretty good one right now. Off again, earnings that were fine. Maybe they didn't meet the high level of market expectations, but nothing that was too concerning.
Yeah.
From a fundamental standpoint. So
Cool. Well, there's your earnings crash course. Richmond's got a lot of snow coming this weekend. So we're projected around a foot and a half. So we don't know what next week is going to look like, if we're going to be in office, whether we're going to be doing this virtually, if we'll even have power. Who knows? We'll probably 99% chance get a podcast out next week. It just might look a little bit different with the weather. Anyways, we appreciate you all joining us today. As always, if you got any questions, concerns, feel free to call or email in. If you've got any requests for future podcasts, we're always have open ears. Otherwise, I appreciate it, everyone, and have a wonderful and safe week.